U.S. markets surged on Friday with the S&P 500 and Nasdaq hitting record highs driven by a sharp rally in chip stocks. Intel shares jumped as much as 19% following reports of a preliminary deal to manufacture chips for Apple devices, while strong U.S. jobs data further boosted investor confidence.
The U.S. labor market is hanging tough, but can it hold? Let's ask Ross Mayfield of Baird. Okay, Ross, we got the April jobs report today, and the economy added 115,000 jobs last month. That was almost double some estimates. Was the headline number as good as it looked?
I think yes. I mean, we're at a point in the labor market where you can't really complain about six-figure job growth. Now, was it fairly narrow? Yes, it was. As with a lot of the reports over the last couple of years, job gains were concentrated in the healthcare sector, which seems to be a real ballast for the U.S. labor market. Just continues to hire health and social assistants. Other than that, it was okay. But again, we're still adding jobs. Wage growth was strong or solid enough, but not, a level where you'd think the Fed would be worried about inflation. So it's hard to call it a Goldilocks report, but it was I think, a very strong report and building on last month's strong report. So, one report doesn't make a trend, but two in a row, you start to feel like maybe the labor market is turning a corner.
Right, because March's great report, those numbers were revised even higher. Do you think, however, that the effects of the U.S. war in Iran, as we know, higher gas prices, commodity prices, could that eventually dent the labor market here in the U.S. going forward?
It's a good question. I think it'll show up more in the consumer spending data than maybe the initial claims data or the actual jobs added data. So I think what you want to watch is something like retail sales, or as we've been watching throughout this earnings season, what are the consumer discretionary companies saying about consumer spending? I don't think it'll show up in people getting laid off, but I think it'll result in belt tightening that could hit profitability for certain sectors or industries of companies.
How does the strong jobs report complicate the picture for the Federal Reserve when Warsh is coming in, Kevin Warsh, presumably the new Fed chair? Powell will still be there for however long, we don't know, and we have a president who wants lower interest rates.
It definitely makes the rate cut case harder, right? I mean, if you were going to make a case for rate cuts, it's hard to make on inflation when you have an energy shock and you have core inflation kind of sticky around 3%. It's hard to make the AI productivity case yet when we saw productivity data out this week that was, okay, but certainly not a productivity boom like we'd been hoping we'd start to see in the economic data. And then the labor market is still pretty strong. I mean, again, initial claims are at 50-year lows. We're adding 100,000 plus jobs month on month. So I think the best that the market can hope for is that the Fed holds pat through the end of the year. I think even though Warsh will come in with a head of steam wanting to cut rates, I think it's going to be very hard to build a consensus on an already split FOMC that has been leaning hawkish at recent meetings.
Okay, let's talk about stocks. And in particular, I want to talk about chip stocks, which have been on a tear of late. The Philadelphia Semiconductor Index is up 63% year to date. And let's pick out some individual names here. Intel, once kind of left for dead, is up 245% this year. That stock is. Right now, as we speak, it's up about 14% because news just broke about how Intel is going to be making chips for Apple devices. Headlines also about this being a bubble. Yet again, these headlines are back. What do you think? Is this a bubble, or do we go even higher from here?
I think we can go even higher from here. I certainly wouldn't want to stand in front of this momentum-driven sector. And I think the main thing it comes down to is, in my mind, it can't be a bubble if earnings are keeping up with price. And if you look at this quarter of earnings, guidance from a lot of these companies, backlog, demand, it's all so robust that it's hard to call this a bubble. And when you look at, a forward multiple on the semis or a forward peg ratio on the semis, I certainly wouldn't say they look cheap, but they look far from expensive if the growth estimates can hold up. You look at some of the foreign stock markets, South Korea, Japan, again, a lot of AI, tech export names. And those charts have gone vertical, back at all-time highs despite energy shortages. So I think this can continue. It'll be volatile. There will be periods of consolidation, but Until those earnings estimates crack, I'd be buyer on any sort of weakness in that industry.